Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the US dollar index strengthened further after the US data showed a drop in weekly US jobless claims, which came in at 228,000 from the prior of 237,000. It is the slowest release in 2 months and therefore could indicate that the labour market conditions are still tight and might elevate inflationary pressures. After last week's number showed that the rate of price growth in the US dropped to its lowest pace in more than 2 years. After the data showed and US inflation rose by 3% in the year to June from 4% in May. Inflation has fallen sharply from a peak of 9% in June 2022, and the latest readings marked the lowest pace since March 2021. Still, next week, all eyes on the US Federal Reserve when they're expected to lift their benchmark overnight interest rate by 25 basis points to around 5.25 to 5.5. The release will be seen on the 26th of July. Now, after the release, keep an eye on what the Federal Reserve Jerome Powell has to say when he takes question and answers, as it could be or find that his tone might be still a little bit to the hawkish side. And with the dollar rallying, now challenges around 100.50. A good improvement considering at the beginning of the week it was at 99.25. So with the increase in the Australian dollar early yesterday, the market found momentum after the Australian Bureau of Statistics showed that the unemployment change rose by 32,600 versus 15,000 forecast. Along with that, previous month was at 75.9. The unemployment rate eased by 3.5% compared to the forecast of 3.6%. As we can see, there is a long wick from the daily price action and left and gravestone doji, so therefore could see further weakness. Now, the call for this week was at 67.35 and we got quite close to that overnight. I still hold that view and therefore could see the market tumble further with the 60-day moving average seen at 66.90. Any advancement should find resistance around 68.45, and that was where the market clearly was rejected. Viewing the euro, the market call for this week at 111.35 was achieved as the dollar strengthened and now may actually see an extension lower towards the region of 110.75. After many attempts to that topside level around 112.40.60, finally gave in to the bearish challenge, and now we can see heavy candles weighing on the market, and that would indicate a further slide. So the call still holds into the start of next week of 110.75. The bulls, while the market is cheering after confirmation of the outside range day of the break of 139.35, and now looks to a trajectory level of 141 to 142, which is very much on track as the market rallies this morning from the lows around 139.70, now trading around 140.25. I still like the pattern that's shaping up and therefore supports the bullish case. The pound has plummeted even further and now puts a forecast in towards the bottom side of this broad trend that comes in around 126.55 to 65. I feel the bulls may defend this region. I don't know if we will reach this low as we are getting a little bit oversold, but still the support levels coming at 128.45 to 127.80 to 127.30. Let's see if we do get a bullish response as the market could correct itself and go back to the highs beyond 131 to 133. But that is a broader call. Gold, well, after many challenges to that topside level around 1,980.90, the market is back to weigh sharply and now awaits the confirmation to this engulfing candle, or more to the fact, bearish outside range day. A break of 1,964 would give further indication towards the downside and bring in a target somewhere around the region of 1,915 to 35. But we do need confirmation to support this candlestick, and if so, the bears will probably come in a bigger or greater number. Wrapping up with oil, well, the market is still holding to a very supportive bullish case, and I feel that since the recent whipsaw price action, the RSI is responding to a support and positively to a rise up towards 77 to 78, which I've been holding for much of this week. A break of 73.80.90, however, would negate the top side and reinstate the downside to 71.70. Well, that's a wrap for the week. Thank you very much for joining me. And as always, look after the interest rate report and I hope you enjoy the rest of the day.